Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the annual Double Your Money sales event for 2012. That's going to be pretty important. You're definitely going to want to stay tuned for that. It's pretty interesting, but we're going to get right to the market. Excuse me. Looking at the S&P 500 futures contract, front month in nature. This is the March 2012 contract. Looking at the last print of 1256 on this last day of the year 2011 is the 30th day of the month, December 2011, last trading day of the year. Again, 1256, kind of a flat day. All the action essentially occurred yesterday. What we're looking at here is our an intraday chart with our intraday dynamics. These are proprietary indicators that we use to kind of gauge where the market is likely to go and trade discretionarily amongst our positions. For instance, we also look for confirmation and negation of any signals that we might generate. But as you can see yesterday, this is of course Friday, it's about midday, and we're looking at Thursday. Yesterday we had essentially save one indicator. We have 1, 2, 3, 4, 5, and then we have about 2 to 3 indications in terms of trend. There's one. Price technicals, where is the market trading relative to its early session high, or the closing high, or the close of the prior day, or the yesterday's high or lower. Having said yesterday's low, or just we deem those as our price technicals. And essentially what we had yesterday was full bullishness, in fact accelerating bullishness. We did have, again, save this indicator, bearishness from this indicator. We actually had accelerating bullishness here, bullishness overwhelmingly, or overall here, overwhelming bullishness here, and of course the price technicals, we had the trend, we were above the trend, price was above the trend, and the price technicals, we were above the closing session high yesterday. So what did that mean, particularly here as we begin to accelerate? That we were going to get not a negation of this bullishness, but a continuation of the bullishness. And in fact what that means is you essentially buy the dips, and we had a nice little dip around 11 a.m. Eastern time yesterday. Beautiful buying opportunity, dip, 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 and then we had a nice little run pop into the end of the session yesterday as well. So that was pretty impressive. Great day to be trading. Certainly, actually, it has been a pretty impressive few days. And actually, looking at Wednesday, what a beautiful trade Wednesday was. Essentially, it's not much of a trade. You just sell short and you just hold on for the ride, particularly when you have, again, confirmation of our proprietary indicators, which all suggested on the open, essentially, again, price technicals were bearish. We were below the lows of not only the close, but essentially really the lion's share of the trade the day prior, Tuesday. We were also below, of course, the trend, and that's 2. We had 3, 4, 5, 6, 7 full indications of bearishness, and of course the market continued to go lower. And so it's a quick snapshot. Not really much to report on this final day. Again, a lot of the action has already occurred the day 2 days prior. So in terms of a free informational day trade in this video, probably not going to have one really too quiet of a session. You might get some whipsaws late in the day. That is indeed possible, but right now, as you can see, the market has essentially died. Having said that, a quick look does reveal a negative divergence, to be sure, but bullishness. We have bullishness here, bearishness here, almost no indication there, bullishness here, but as you notice, these highs are certainly not matching the highs of the prior day. So those are negative divergences that we certainly can identify and keep us out of the market. So we're going to go ahead and switch over and look now at the daily chart of the daily market, and that should be right here. There we go. So we're looking at a daily chart of the S&P 500 futures contract. Again, the market's kind of been playing around the 200-day SMA. That's a simple moving average. We generally prefer the exponential moving average. It's a little faster, weighting a little more quickly on the indications. What's particularly just jumps out of the screen here, what do you guys see when you look at this screen? Well, obviously we have this trading range, and of course that's highlighted by the horizontal lines. So we have the trading range from essentially 1180 to 1200. We'll call it 1100 to 1200, 1180 or sorry 1080 to about 1220. But the most notable thing that I see particularly here is an inverted head and shoulders formation. We have a potential shoulder right here, and a V bottom right there, so an inverted H&S. If we can get above that resistance right here, which is at around 1260, and certainly 1280, we should have a pretty nice run to 1300, 1350 and retest these old highs. And actually, probably we're going to have a target of around 1400. Maybe by April or May or so, if we can get above that. Now, of course, the market. Let's not forget, we had drawn this trend line. This trend line had been in existence for a while. You see, we broke the trend, came back up, retested it, came back, finally retested the prior lows. That gave all clear for the unofficial buy signal that we issued to our clients. We went officially bullish on the market at 1200. That got a little taxed right there, as you can see. But again, we're maintaining our full bullishness on the market, particularly given that we are above all of our key measures of trend following support resistance. As you can see right here, the metrics 20%, 50%, and 30% means 100% bullish in terms of directional movement, short-term bullish and intermediate-term neutral, short-term bullish and intermediate-term bullish in terms of momentum. So we have overwhelming bullish bias on the market, and what's more, we're above the 200-day simple moving average that the market's been keying from, in concert with the underside of the trend. As mentioned, we have again did come back and retest the underside of the trend here, and waxed and waned a little bit just to retest at 1200. What a beautiful buying opportunity. We had some key systems in our platinum reserve that were long around 1200, so that was a beautiful day right there. We're going to go ahead and look. It's enough of the analytics on the daily, on the intraday. Now we're going to switch over and look at, here's a free system that we offer you. Wow, it's super active, isn't it? We actually haven't seen any trades. This is a contrarian perspective, and as you can see, around $4,000 a trade. Excuse me, but it doesn't trade often. We'll certainly include that in a video, or you can trade it in full automation for free. Just go to the website and or write to admin at MiniAnalyst.com to find out more information on that. But actually, we're looking to move over to, we'll just go ahead and minimize this. We've got a lot to cover, and that's where we've already been. So we'll go ahead and minimize that. And these are, I think we had something else to look at. Here's our EMD system 1.0, just simply nailing it, and another long right there at, let's call it, 864 in the market. So that's good for another $2,000 almost per contract in this trading model that we've used for probably about 7 years maybe or so. It did have a slow drift higher, but kind of whipsawed. But as you can see, when it gets on a run, it absolutely gets on a run. It's made about $40,000 per contract. That doesn't include the $2,000 that we have currently. Looking at the Aussie, trading the Forex. Look at that in another amazing winner. Now, TradeStation doesn't allow you to enter in the system's 100,000, but you can multiply this by 5. There's even detailed. You can multiply this by 5, and so obviously you have $35,000. I think we need our maximum drawdown information. 885. that's absolutely amazing. $4,500 drawdown, $85,000 or $35,000. So nice 10-to-1 reward to risk ratio. The Evo EM. Let's see what it's been doing. Putting up a nice winner there. Evo 1 lot. Putting up a nice winner there. $5,000 max drawdown. The Evo EM active. This has been nailing it. 1, 2, 3, 4. Beautiful winners, as you can see right there. And of course the actual Evo also putting up 4 winners. Not too bad. And we're going to go ahead and minimize that. And here we go. We're looking at some of our platinum models, moving right along. These are platinum reserve models. Again, we've never offered these to the public. And you ask, well, your portfolios, the MAP DT is up almost 500% this year. You have several portfolios up over 400% since late January. Why would you offer the platinum reserve portfolios? Well, there's just really no reason not to add value. If we can add value to your accounts, to our clients' accounts, then what are we here for? We're here to make money and to provide you as much value as potentially possible, and we've done so with the adding the Platinum Reserve line of trading models to the public that you can actually trade. And as you can see right here, here's the first model. Beautiful winner. See how we're doing. Let's see, we can go ahead and take a quick look at those. So there's a beautiful winner, two beautiful winners, three actual winners. Here you have the MDS, actually in another long, gave up some of its profit recently, and as a matter of fact, the first time we started trading this was the first live trade of this model. This is actually a new model. This is not really part of the Platinum line, so we should actually probably move that maybe down here. But this is certainly offered. If you're interested in it, we can actually go ahead and pull this up. It's our latest developed model. We essentially develop non-optimized, non-curve fitted trading models, about 2 to 4 per year, and we've been in business almost a decade. So we've developed quite a few trading models, and this is the best of the best. In fact, the MSA UDT, which is I think number 2 for the year, actually the MSA Ultimate line was essentially in 2010 an effort to go through and cherry pick all the best trading models that we did offer. And so that was the result of the MSAU DT, the day trading model. We actually had an MSA Ultimate, which had a swing model as well. But as you can see, the performance has really shown through with 2011 up well over 400% in real time strategy runner tracking. And so there you have the EMDS in another long. Actually, just yesterday, 78.30, $300. Gave up some profit on the last one. Got a stop out there, but after gaining about $4,000 to $5,000 on this trade, that's certainly doable. Beautiful trades there. EVMCM donating quite a bit to the brokers yesterday. Had a few trades, very choppy session yesterday, but as you can see, more than made up for in these amazing winners that you see right here. We can go ahead and scroll in and scroll over and scroll in. Look at that. Look at the beautiful winners there, and another beautiful winner there. And then, of course, donating a little bit, kind of essentially a flat day. We had quite a few winners late in the day, and some stop outs prior to that. And here's the ISRD, and another beautiful trade. Goes long in yesterday's open, 1248, runs right up to 1260, still holding long position in that. So as you can see, look at these beautiful winners. Again, we're going to go ahead and just look at the PR lines all breaking out to I don't know what is wrong with this software. It seems to be very laggy. All staying at the green, or certainly close to it, close to equity highs, and this course is over about 10 years. So that's the platinum lines. We're going to go ahead and move along. We should be able to minimize this and get out of that choppiness. So this is our double your money sales event. We do this every year, as you know, as a lot of our clients who participate in this every year. We certainly appreciate your business and are glad that we can make you quite a bit of money as well. That's what we're here for. So confident are we that we will make you a very enviable return, let's say. Particularly, you have returns on relatively risk-free investments, pretty low, almost zero. Essentially, particularly adjusted for inflation. So I don't know, maybe 8 to 12% in stocks is particularly enviable. In terms of futures trading, a lot of, particularly given that more than half of your gain, 60% of your gain that you trade in what we do provide stock index futures trading, both speculative and hedging, preferably hedging, as we recommend 10 to 20% of your total portfolio. If you have $1 million, put 100,000, maybe 200,000 with us, and of course you seek more conservative returns, yields on the remaining 80% of your portfolio, your $800,000. But most futures portfolio managers seek returns, I think, of around 35% or so, and that's actually tantamount really to maybe 40+%, maybe even 45%. I'd have to do the numbers, given the tax savings over given that 60% of your gain is at a 15% tax rate, the long-term capital rate, long-term capital gain rate. So it's pretty impressive. But when you look at our portfolios, look at the last 7 days for our top portfolios. The MAP-DT, the venerable MAP-DT. Again, we develop 2 to 4 new trading models per year. So this MAP-DT is the original $20,000 portfolio, and it still has original models. But certainly some have been added and some have been dropped over the years. But as you can see, just over the last 7 days, this portfolio has made 93%. The MAP-DT. Now this is the original. Now when you go to the website and you subscribe, what's offered is the MAP-DT version 5.0, and it's an awesome version, believe you me. But if you're interested in, say, the 4.0, these are the ones that are tracked on Strategy Runner's website through Strategy Runner. We'll look at that in a second. Just need to specify that you would like the 4.0. They're all the same price, $28.88 per quarter. It's less than $1,000 a month to make, essentially over the last 7 days, $40,000. I'm sorry, that is wrong. $18,000 over the last 7 days. Look at the Delta DT, a $35,000 account making $26,000. This does not include slippage or commissions. One would argue that it does include slippage, given that these are supposed to be accurate fills. And but there you have the actual performances of the portfolios over the last 7 days. It's been an absolutely amazing 7 days that we've seen. So it's a really just a cherry on the top of the Sunday of 2011 in terms of one losing day over the last 7, essentially. And of course we had the banner day Tuesday where the MAP-DT gained 55% of its gains. Again, 10 to 20% of your profits, 80 to 90% of your profits are going to come on 10 to 20% of the trading days. The rest of the days are just kind of, you don't really worry about it. You kind of chop around, you lose some money, you make some money, you lose some money, you make some money, you lose some money, you make some money, and then you're around for those huge winners. Going all the way back to Bill O'Neill of Investors Business Daily, always said you have to have diversification, at least 5 assets. One will tank, one will be great, or one will be okay, a couple will be okay, and then 1 to 2 will make your year in your portfolio. And that's essentially what we do with our diversification. Each of these portfolios trade several models, but again, that's over the last 7 days. Absolutely banner performances that we've had, totaling as of the 29th day yesterday, last 233 days or 250 trading days in a year, 486% has been the gain for the MAP-DT, $97,000, $97,275 after slippage and commissions. You're probably going to be looking at a figure you could easily even each model trades probably 10 times a month. So depending on the models, for instance, the MSA-UDT has 6 models, let's say on average, so maybe 50 round turns a month. You're looking at $7 a round turn, which is $1.50 automation fee for Strategy Runner, $1 account management fee. That's of course if you're a yearly VIP member, and it's $3 if you're not, and the round turn commission of just $4.50 a round turn. So that totals is $7. So you're looking at 7 times 50, $350 a year, maybe $3,500 for the year, 350 a month. We'll say 4,000 for the year. Slippage, again, these are supposed to be accurate. The way the software is designed and the tracking is supposed to represent an accurate fill, essentially buying at the bid, buying at the offer and selling at the bid. So 4,000, but we could essentially double that to 4,000. Well, actually, you would need to increase, double it. So you're looking at $8,000 in slippage and commissions for the MSA UDT. You're looking at a $47,000 return for the year since late January. So it's around $40,000 in what should be real world profit. Again, it's a $10,000 portfolio, trades 6 models. The margin is $500 a contract, 6 contracts. You're looking at $3,000 in margin. We recommend $10,000 to withstand any drawdown, and you're looking at basically on the 10,000 that we recommend, not the 3,000 in margin, but the 10,000 over 400% actual return. Again, these don't include slippage or commissions, so you would definitely need to deduct commissions, but again, slippage should be factored in. And we've done many tests, trade station fills, strategy runner fills, strategy runner pro demo account fills, and the slippage essentially is negligible pretty much in all. Because you're going to get favorable fills and you're going to get bad fills and you're going to get fills, and it pretty much averages out. This is a particularly long video. Hope it doesn't cut us off. So the interesting part is you go to the website, you can check out the real-time tracking we've just updated till yesterday. There you see the returns, and you can go to the website. We have now, again, our annual Double Your Money sales event. Not only, so you enter a promo code Double Your Money on any purchase. You buy 4 quarters. Essentially, you only have to pay for 2 quarters. We double your money, but you do have to enter 4 quarters and the promo code to save 50%. Essentially, you also save 20% on brokerage commissions. Instead of $9 a round turn for the strategy runner automation fee, the account management fee of $3, you'll get an account management fee of just $1, so $4.50 commission, $1 account management fee, $1.50 strategy runner fee. 22% you're going to save there, and you're going to get a money back guarantee. We haven't done this yet. We're this confident, and of course it has to be an approved trading model, but most of the clients are going to hang around the top echelons. For instance, these portfolios down here didn't perform as well. They could outperform, but generally speaking, the guarantee you have to write in, there is an asterisk. You have to write in, this is the strategy runner tracked model. It has to gain 100%, which essentially you're going to gain 100%. And if it doesn't, then you're going to get your subscription fee back. So we essentially double your money here. We're going to double your money there. In fact, you see these returns are handily outpacing the double your money, which is 100% return, and you're going to save on commissions too. So if you guys have any questions, go to the website, chat with the support team. I'm going to show you real quick how to do that. Let's say you want the MSA UDT, $10,000 portfolio. If you have any questions, go to live chat there. Scroll down to where it says add to cart, reads add to cart, and it's going to show right there that you need 4 because we've already got the promo code in there. So you have 4 quarters, $7.88 a quarter. That's what's particularly interesting. Actually, let's just go ahead and go over here to the map DT, and we'll scroll down, add to cart. That's $28.88 per quarter, and we're going to put. I'm not sure if you can. I'm sure you can. We're going to recalculate that. We're going to enter the promo code. So you're looking at $12,000 for the map DT. You can do the original, the version 5.0, or the version 4.0. Less than $1,000 a month. Now, to keep in mind, there's your return. Map DT, $90,000, $97,000 for the map DT for the year. We're talking about less than $1,000 a month. Here's the beauty. Enter the promo code double your money, and you're going to get, we can just take this out of here, this MSA UDT. So for essentially $500 a month, $500 a month, just $5,776. It's some upfront cost and the guarantee. So you'll get this money back if we don't double your account. So I mean, it's just unbelievable, the opportunity that you have here, and it's $500 a month, This is how we've done over the last, for the MapDT year, $500 a month on a $20,000 investment. You're going to make $80,000 to $90,000 after slippage and commissions. That's it. If you guys have any questions, go to the website, chat with the support team live, shoot us an email to admin@MiniAnalyst.com. Hope you guys have had a great holiday season, and I hope you all have a wonderful New Year's Eve. And here's a Happy New Year, and we will see you next time.